Hello and welcome back to another Bitcoin analysis video on this little crypto channel. Today I'm going to be talking about what is going on with the Bitcoin price, potential bullish setups, potential bearish setups, and I'm going to go through some previous trades that I've recently just done, okay? And I'll tell you also the most important thing that you've got to remember in trading, because if you forget this, you're going to lose money. I've lost money doing this mistake, and it's all about stop placement and risk management. I know it sounds boring, but it's important. So let's go into the lower time frames, because if you want to see the higher time frames, you know my target's down here around 5,000, 6,000 and lower. We're in a downtrend, and there's only downtrends at the moment, so very bearish. But I'll show you some setups that have come in recently, okay? So first, let's drill down to the 1 hour. And first of all, I only trade on the 4 hours, the 1 hours, and then I use the 15-minute to get a trade. So for example, if I see it coming up into here, which is a reload zone, if I draw this to this, you can see that this is a reload zone up here, 61.8 to 78.6. I would call this a reload short zone right over here. Ba-bam. And that's before it came down here. So assuming it came down here, it started making its way up, and then I was like, oh, it's really making its way up. And then I would take a short somewhere in here as long as the full setup came in. So I'll tell you a little bit about that. So that's an example of a short setup, but you can see how that worked. Okay, so here's a setup I took the other day. This was exactly this setup. As you can see, it came down, it went back up into a short zone, and then it put in market structure. And that's an important element of actually trading. So if you drill down to the 1 hour, you can see that a market structure is an M or a W. So an M like this, where it breaks that market structure, or a W, where it breaks that market structure. You can see the lower high, and it's broken, and the higher high, and the higher low, and it's broken. Okay, so that's market structure. So where do we see that? Well, we see it right here, right? It's come down and it's broken. So that is where I took that trade. So I risked down, I had a target down at 61.8, and I risked up to a break of this level, because basically what happens is if it breaks down here and it comes back up and it breaks this level, then I would assume that this M has been invalidated, and now we've got a bullish structure. Okay, so let me clear everything from the chart so you can see that M quite clearly, right? So what happened was, obviously it did come down. So this is what happened afterward. This was my entry point, my entry chart, and this was one of my exit charts. So it started to go down, so I took profits in the middle, and then it went to this point where it came down here and then went back up, and that's where I put on a second trade. So here was my thinking for the second trade. So the second trade was not as good of a trade, but it basically came down to test this M, horizontal ray right here on this M. So let me put that a bit thicker, maybe give it a nice color for you guys so you can see it. So what happens in a bear trend is that it comes down and it breaks this level, and then it comes up to test this level, and then it comes down again. So in a real life chart, it goes up, down, up, and then it breaks out. So it's broken this level, so I'm in a trade, and I've already taken profits. Like I said, I took profits about halfway through. So with that taking profits, I'm now waiting for it to retest. So look at that. It came and it made a perfect retest right here, as you can see. So whatever I took out here, I put back in here with an even tighter stop. So that was my thinking for that, and it wasn't the best trade, but this is in my trading plan, so I allow myself to to the trade on a retest simply because I'm already in profit and my stop is at break even. So it's really, really fine for me to do that, but I wouldn't recommend doing that if you're just starting out. I would just say take profits and get out of the trade. Okay, so then what happened? Obviously, I got into that trade and then it came down, it hit my profit target down here. As you can see, it hit my profit target, so I got out more profit and I had a stop set right over here. So I'll show you that on the charts. So I took out more profits down here, and down here, and then I had my stop set right over here, right above this line. So I went to bed, I had my stop set, and I had more profit targets down here at the 61.8, because again, you have multiple different profit targets, so you can keep taking profit no matter what. So I had profit targets at 61.8, at 702, and at 78.6. So those were my 3 profit targets. So this one hit, this one hit the 61.8 hit, the 7002 hit. Those were my 2 profit objectives, and the 78.6 never hit, so I had to cancel that order this morning. Let me just clean this up. So it hit, and I had a stop set. And why did I have a stop set? What does that mean? Okay, so what that means is that when I took profits here, I didn't want it to go all the way back to my entry and I would lose any extra profits. So I would get out of the trade if it broke this level here. And the reason is because in a downtrend, it put in an M structure here. As you can see on the 5-minute or the 15-minute, it's a lot more easier to see. Okay, there you go. You can see that big M right there. And remember what I said about M's being invalidated. So the M came in right here. And what did I do? Because I took profits, I added to my profits here, which means I added to the position here. Because again, it's in my plan to not only take profits, right? It's not in my plan only to take profits here, but also whatever I took in profit, I add back into the trade here for a further move down. So I took profits here, down here, and I added back to the trade over here. But because I'm adding to the trade, you have to move your stop down. Because if you don't move your stop down, then whatever you've added, if it goes against you, you're losing profits. So you don't want to ever lose profits from a winning trade. So I put my stop about here, which is just this level right here. And the reason is because if it breaks this M, if it breaks above this M, if it comes up here and it breaks this M, then it's invalidated my market structure M. It's invalidated it. So I want to get out. And because my original profit entry, my trade entry was up here, if I get out from my entire position here, I'm getting out with all this profit. Okay, so that's really, really key. It's a huge part of trading. It's about making your trades profitable. And as you can see, I got out and the trade went whoosh. Okay, so I woke up this morning with a profitable trade, even though the market went in the complete opposite direction to what I'd planned. Okay, so what am I looking for now? So I go to the 1 hour, or you know what, I'm going to go to the 4 hour, just so I can show you what I'm looking for now. So now I draw a reload zone from the top to the bottom. So that's the top of this range here to the bottom of this range here. I draw one from the top here to the bottom here, and I'm going to pull this one out a little bit so it can be seen. And then there's a smaller range right over here from this top, local top, to this bottom. So I'm going to move this one out a little bit, and then I'm going to do something called reload zones within reload zones. So I want to get short on this. Again, the trend is down, so Joshi wants to be short. So I've already taken profits from my shorts yesterday, so now I'm going to look for another entry. So I'm going to draw a red box from this 61.8 to 78.6. Let me turn off the magnet there. Okay, 78.6 to 61.8. That's one box. 78.6 to 61.8. That's box number 2. And then here is box number 3, 61.8 to 78.6. And you can see there's a beautiful overlap. This is called a reload zone within a reload zone. So you see this triple area here, right over here, this triple area where this box, and this box, they all overlap. There's also an area over here called the sweet spot, 702, which overlaps with another sweet spot. So that's a double sweet spot. So I'm looking to get short in these two positions. This is how you pick location. Okay, so this position right here, I'm going to change that color so you can see it, and this position right here. So what I'm looking for is to get short on these positions. So how do I actually get short? These are my locations, and you can see we're coming up very close to them now. So what I do is I drill down to the lower time frames. I would go to the 1 hour, and what I can start to see now is that coming up into these areas, we had a run up and another pump. Let's see if we've got any divergences. First of all, we've got a clear divergence in volume. So the price is going up, but volume is going down, telling me that the volume is not as strong on this move, which means a down move is coming. Now on the 1 hour, there's no divergences on the MACD, on the OBV, or any of that stuff. So I drill down to the 15-minute to maybe get some answers. Okay, so here on the 15-minute, you can see the price has gone up, but MACD is making a lower low. And also RSI is making a lower low. Now the only thing that isn't making a lower low is OBV, which is why I'm not 100% about this. And also I'm going to teach you something about these divergences. They are only valid when you break market structure. Okay, so just like with the price, the price has a market structure, and it's only valid once it breaks this point. Same with RSI. It's only valid when it breaks this point and it puts in a market structure top. Right now, even though there is a divergence, it's not a valid divergence. It's called an unconfirmed divergence. And if you don't want to trade on an unconfirmed divergence, because look what can happen. Okay, what can happen is it can flounder like this, can put in a W, and it can break above. And guess what? That is a market structure W. I know it's very high up, but right, it's very oversold or overbought, whatever this side is. I always get confused. But it's a market structure W up here. And what will that look like on the price chart? Well, that will just look like a higher high being pushed. And that can keep going. Markets can do that until you actually get a confirmed breakdown. Then you don't want to actually take any trades. Okay, now if I want to be really sneaky and I want to get in on this trade, which is a very fast moving trade, what you can see is that we're already in the red boxes. We're almost in the red boxes, and we are kind of coming down a little bit. So how would I get in on this trade? Well, I would open up a 5-minute chart, and I would see if there are any confirmed divergences here. Okay, so for example, we've got a little mini divergence, this right here now, this with the volume going down, and and right here is the mini divergence. So the price is going up, and the volume and the RSI is going down. And if this is the neckline, then you can see we're just now breaking below this neckline. Okay, so which means we are putting in a divergence. Now OBV as well on this time frame is also putting in an M structure. You can see that M clearly, and it's breaking down below it. And while price made a higher high, OBV made a lower high. So there's your divergence right there. And on the MACD right here, you can see we made a higher high here, and MACD on this little divergence here, it's now broken. So again, we're looking for market structure M's, and right here you can see, oh, let me fix that, move that. Right here you can see this bar, it broke this bar. So here's the M. I'll show you in actually drawing terms. This is the middle of the M. It comes back up and it comes down, and here you can see it's coming down below this level now, and this is the break line level, and you can see this bar right here, the MACD bar, it's putting in a lower level, so it's breaking down. So let me clear up this chart again because it's a mess. So you can see that's how I pick short location, right? Now, the last thing you want to wait for, once you've got the location. Okay, let's go back to the 1 hour so you can see the location. Oh no, I cleaned up the whole thing. Okay, let me just draw this again. Oopsie daisies. So we've got location here, and we've got location from the higher time frame. You can see we just hit the 61.8. So we've got location. That's the first step, right? 1, Loki, right? The step 2 for a trade is divs, right? And right here we've got divs on the 5 minute. So if you drill down to really lower time frames, we got divs on the 5 minute. Here's a cleared divergence. Here, this is now confirmed divergence, and OBV as well has put in a divergence right here. And the last thing we wait for is, who knows it? Last thing we wait for is a market structure top. Okay, what is a market structure? Market structure. Okay, so market structure top, and what that looks like is an M on the chart, because again we're looking to get short, so we're looking for an M on the chart. So we look for 5 minutes, and so far we have not got an M on the chart yet, so I cannot take a trade. The reason why you wait for an M on the chart is so you can have a risk window, and this is where it's so important to manage your risk. Okay, so an M on the chart would look like this. Doink, right? So it would break down there. I know I've said this 100 times, but it's really important. And what you do is, this is your entry right here. You're risking to the top of the left side of the M right here, and your profit target has to be at least 2 to 1 risk reward. So that's a 2.03 risk reward. And you generally want to go for a 50% retrace. So let me show you what that looks like. From the bottom right here to the top right here, down here would be a 50% retrace. So what we're looking for is an M to come in. Here, this is not an M, right? Because it's got a higher high. So even if it breaks this level right here, it could just come up and do this, and it could come back up again, right? So because this is not a valid market structure, it put in a higher high, which is a bullish trend, versus a lower high, which is a bearish trend. That is not a valid market structure. So looking at this right here, I would say this is not a valid market structure, and it could either push higher, or what I hope for is that it produces a cute little M right here. And remember, we're on 5 minute chart, so this is very shark trading sort of thing. If it does this as well, this will be a little head and shoulders pattern, which is a fractal pattern, which contains a broken W and then an M. So it's a fractal position. And you see many bar patterns that look like this, like an empire pattern is a version of the head and shoulders pattern, like this. So if that comes in, let me just delete a few of these because I draw on my charts a lot. They get very, very messy. So if that comes in, then I will take that short over here. And when I say I risk down to below, let's say it comes in here, it puts in an M right here. So what I do is, I take my thingy, whatever this is called, I risk up to the top here, and then my profit target is down at 50%, so it's a 3-to-1 risk reward, so that's a really, really good trade. So if it breaks above here, I just get out. If it comes to my profit target, I take profit. So you can see that's what that would look like with all the mess. There should be an eraser. Is there an eraser? Not sure if there's an eraser. Don't think so, because I just want to be able to rub out everything. Oh, that's not what I wanted to do. Okay, so that's what would my trade would look like. And again, since we're in a downtrend, this is why I would only take shorts in a downtrend, because if this is just nothing more than a massive stop run and all these shorts right here, they're just getting squeezed, then when I get in short up here in reload zones, which is the best place to get short, in reload short zones, I've got location, right? I've got divergence on the lower time frames and some on the higher time frames. I've got market structure for when that comes in. That's when I will take the trade. Okay, so it's really, really important that you wait for these things before taking your trades. If you don't wait for these things, then the trade will likely go against you because the trade didn't set up fully. You need to follow a proper setup, a proper plan, and you've got to put your stops in place, which means that if you put in a short position here and you say that you've got a stop here, as soon as you enter the trade, you have to put your stop in. Okay, this isn't investing. You're not buying for a long-term hold. You're buying because a setup has come in and you want to take quick profits. If the trade goes against you, you can get out early, or you have to get out when it stops. Instead of just waiting for when it stops, like if you go to sleep or if you go to the toilet or if you're away from your desk, you want to make sure that stop is actually set. So you've got to learn how to place stops. And another great point here is that we're coming up to this horizontal resistance area. As you can see, I'll make it red so you can see that it's obvious. You can see this market structure M right here that we put in, where it broke the M over there. You can see we've done nothing more than just come straight back up to this. So if we put in a market structure top here, then it's a great location. You can see that this M was not valid, and you can see it's working a bit higher now. So really, really important few steps of trading. I hope that helps you guys on the lower time frames and sort of how I trade. You can see I got out from down here, so I'm in profit. Here's that position again. I got profit down here, and then overnight it screamed back up. So all of this fluff, I was already out of my position for, so I didn't lose anything on that push up, and I'm just looking to get in another entry. So I hope this video helps you if you are just learning trading, or you're starting out trading, or you want to sort of day trade and make profit from trading. So thank you so much for watching, and enjoy the rest of your day. Take care. Bye bye.